Kangema Member of Parliament Peter Kihungi has proposed that the Kenya Tea Development Agency signs management agreements with tea factories aimed at enhancing efficiency and earnings to farmers. Kihungi has also criticized the move by KTDA to raise the service fees, urging the agency to stick to levying management fees as stipulated by the Tea Act.
A number of tea factories in the east of the Rift Valley are yet to sign management agreements with Kenya Tea Development Agency. This is because KTDA has been pushing for revision of the management fee to be increased from 1.5% to 2.5% of the total sales, which has faced opposition from tea factories.
Managing agent should not charge anything more than 1.5%. Previously, they were charging 2.5%.
Kangema MP Peter Kihungi says this stalemate is threatening to cripple operations of KTDA-affiliated factories.
For now, the management agreement between tea factories and KTDA was supposed to be signed by 17th this month.
Okay.
They did not sign because they said that moving from 2.5 to 1.5 is too retro.
He also wants the Kenya Tea Board to fully implement the Tea Act for the value chain to reap the benefits of the reforms in the subsector.
KTDA cannot be able to work with 1.5% as the managing fee. They should look for other management agents. There are so many who are willing to work with tea farmers.
Benson Droba reporting for Lunchtime News.